Stephen, hi, morning. Pretty much seems like the penultimate patch and the grand finale now to tariffs. While there is chatter that the deadline itself may be extended to August 1st, but it seems like in the next 2 days a lot could happen.
Yeah, looking at the way the markets are trading or have been trading over the past fortnight or so, seems to me that most desks are leading into a derivative of the taco trade. That's the Trump always chickens out. It's a well-worn reflex in the markets right now. Although, sure, there's still some chatter that the tariffs could come in a little bit higher. But I think what we're seeing right now is the acceptance that we're going to fit into some easier base tariff, something around 10 to 14%. Effective tariffs rate in the U.S., which is by all accounts quite manageable. Of course, we're still trying to figure out how that passes through into two key areas for equities. One is inflation and how that will have implications over the Fed Reserve policy. I think a lower tariff sort of alludes to a VAT-style structured tax, which won't be a tactical resurgence of inflation. It'll be a one-off inflation. And then we're looking at how it impacts margins on who's going to be absorbing the bulk of these tariffs. Traditionally, we would expect corporates to pass through a bulk of these tariffs. However, we're not seeing that play out into inflation yet so far on the tariffs that are currently structured. So it seems to me that either corporates are eating some of this or the exporters are eating some of it. So we're not quite sure how this will impact into Fed policy. We may very well have a very dovish Fed policy come the end of summer, and that will continue the rally forward. But again, all predicated on the absolute levels of tariffs across the board.